Good afternoon, everyone. How's everybody doing? Alrighty. Um, Bringing up a couple things here. Um, and here we go. Um, so we had the old GDP and CPI and stuff like that come out, and kind of got to see how they were going to do. We also had the S&P Global PMI and the ISM non-manufacturing or the ISM manufacturing index come out today. And I thought that was kind of interesting because the S&P Global was a little bit down, but when the ISM manufacturing index came out, it was actually improved a little bit, and even the ISM manufacturing prices actually dropped some, and that's why basically you kind of saw the market rally there after 10 o'clock this morning. It was a little more positive. Then come around 10:30, usually when we have European close today, the market's kind of selling off, and I think that might have been because of the 4 week and 8 week bill auctions. The actually interest rates were a little bit higher, so they were like, "Oh no, interest rates still trying to inch up a little bit here." So that's kind of where it's just this news, that news, that news, this news. And it's also been kind of interesting and kind of the global markets in a way. Yeah, here on the screen, you're looking at gold on the left side and crude oil on the right side, and you kind of see gold, the little down red bars. You see kind of a little bit to the left there, a little bit. These things right here. This is the 2nd of April for a couple 3 days. Everything was getting tanked, right? And here's crude oil over that same time period, everything's just getting dumped off. Here's comes the tariffs, right? And then gold kind of flipped back around and it shot up to new highs. Um, and what's really interesting about this move on gold was China was in here and they bought a little over 1.2 million ounces of gold in through here. And so it just kind of shot it right up. How you like that one? Um, Then all of a sudden you kind of see this little drop here, kind of hesitation and a little drop. Well, guess who's selling the gold that they bought? China. How you like that one? So, but they're not selling as much. They only sold 1 million tons as opposed to buying 1.2 million tons, right? So they've been out there, and this is kind of the weird thing is the, of course, the Asian markets open up in our evening time. All right. So when we're at home, doing homework with the kids, whatever, getting them in bed, all that good stuff, that's basically when the Asian markets are opening up. They open up right around 8 p.m. Eastern time, and then around 1 o'clock in the morning they go to lunch and all this good stuff. So that's basically what you're looking at as all the buying and the selling is going on during that time period. So by the time we get up and get in here, gold can be way up or gold could be way down. You look at the past 2 mornings, gold's been down, right? About 60, $70. One thing that's kind of interesting, get rid of all this chicken scratch on here. Um, from the highs down into here, this was lost about 8% in here, but really from where we kind of started out on the year, we're still up 22% on the year on gold. So even though, yeah, we've had a little 8% correction off the highs, we're still up 22% where we're currently sitting. So, yeah, it's come back a little bit, but I mean, nothing ever goes straight up, right? And it wouldn't surprise me that this doesn't kind of come in here and chew around a little bit, maybe come down into this 3175 area, probably. And if it does that, my guess is you're probably going to start seeing buying coming back in because really nothing's changed. Um, Crude oil, on the other hand, even though, yeah, it got dumped off in here, it actually tried to bounce back up along with gold a little bit, right? But now we're kind of correcting back down again. And you've got several things going on. OPEC has actually come out and said, hey, we're not, well, actually, Saudi Arabia came out and said, we're not going to support prices, period. We don't have a problem with crude oil pulling back. We can handle that. And so when that kind of happened, they were just like, oh boy. And so here it goes. But you also have two other things. You had some information come out of China also that their exports, their shipping out to the United States basically has dropped off like 30%, 25, 30%, which duh, we have tariffs, right? Plus, I think also they put something else that it's $1 million a ship going into a port or something like that in the United States. I mean, there it is. And so you have less demand on crude based off of that. Um, and you've got now a GDP number that came out that was negative zero point 0.3, right? So you think about negative GDP, that means we have a contracting economy. And in theory, that will, with a contracting economy, people will pull back, and therefore what? They don't drive as much, they don't fly as much, they don't do all that, so there's less demand on crude oil, and therefore it's getting yanked back again. Even though, if you look at the EIA Petroleum Status Report, which was really interesting, there's an API report that comes out on Tuesday night. That's the but the API, the American Petroleum Institute, goes out, and they're the ones who basically, I don't want to say make regulations, but they make kind of the rules and the laws that kind of make all oil companies abide by the same rules and laws, safety and all that good stuff. You have to have API certifications to be on these platforms or those platforms or in that refinery or all that kind of stuff. So they come out weekly with their little blurb of this is what we think crude oil inventories are. Well, they had a 3.6 million surplus in crude. We get to the EIA, which is a day later, which is the Energy Information Administration, and they came out and said we had a 4 million barrel draw. Well, that's 7 million barrels difference here. So, um, I mean, that's a lot of barrels, right? So, so we have a 4 million barrel draw. And we even had a huge draw, 3.6 million barrel draw in gasoline. So that report was actually bullish. And if you looked at crude oil yesterday, um, and clear all this stuff up. Let's just go to a 30-minute chart here real quickly. Bling. There we go. And we'll get to this. So yesterday, basically, when the inventories came out, they kind of shot things up a little bit. You can see this little spike up in here, and then they kind of pulled back a little bit, and that was kind of into that. So it was a bullish report. So they did jump crude oil up, but after that, it was kind of short-lived because, well, okay, that's just last week's report. Now we get to have to deal with the rest of the world. And so they basically kind of pulled things back and kind of hung out after that. And then, of course, then we started selling off overnight, just like with gold. Gold was selling off, crude was selling off. Then we had this nice little bounce back up here as Shell comes in and takes a huge stake in the Ursa platform out in the Gulf of, I guess called Gulf of America now, whatever. Um, and so now they have a controlling stake in that. Of course, Shell is the largest Gulf producer of oil and gas. So they're just making themselves a whole lot bigger. We get a bigger demand on natural gas of about 20% out of Europe. And all of a sudden, crude jumps up and says, okay, here. Plus, manufacturing's doing better. So that's going to put a little more demand on things. So we get this nice little bounce up in crude, but it really didn't mean a whole lot. Never got back above $60. And now we kind of pulled back again. So, but this is the volatility of life right now in the markets. They're just all over the place. And another thing that was kind of interesting also, check this out. Uh, this is the chart of the S&P. That's a 30-minute chart. But I guess this would kind of show it. We opened up last month on the S&P at 56.44, all right? And once we went down after the 2nd of April, we never been back above it. Well, here we come to the first day of May, and what do? Last night, they actually rallied up and they got above 56.44. Look at that. And they were just like, look at us. We're above 56.44. And so that was basically above last month's open. And then they kind of sold things off a little bit. And I think the sell off here, this is based off that 4-week, 8-week, auction. But they're starting to kind of bouncing back up a little bit. But now they're starting to kind of hold some port at last month's open. Now, We opened up this month at 56.15, which is below last month's open. So I think as long as we're above that 56.44, 56.45 area in the S&P, this market actually is a little more positive than negative. And because we're above this month's open right now, right? So, but as long as we stay above that, I think the S&P is really going to be a little more positive. The Nasdaq had been above its month open last month. The Russell and the Dow and the S&P had not until last night, where the S&P kind of jumped up and said, "Here, now we're back above that." So maybe we're starting to get a little more positive move out of the market, and I think we'll just have to give it a couple of days here. We got the non-farm payrolls coming out tomorrow, the employment situation, if you want to think of it that way. Um, and so what that's going to do, say whatever. If you look at jobless claims this morning, um, you actually had an increase in jobless claims. Even the 4 week average, we were above that 4 week average. So you had your initial jobless claims and continuous jobless claims actually jumped up a little bit, which I think everybody kind of expected that anyway. With people getting laid off, even what was it? UPS came out and said they were getting rid of 20,000 people and closing some stores because apparently they cut ties with Amazon. I guess they're not going to be delivering Amazon packages anymore. Kind of what I gathered from that little report I read. So, which I thought was kind of interesting. But anyway, there's kind of how things have been panning out over the no since we met 2 days ago, right? So we got a lot of stuff going on, and it's just like this all the time. Every time I see something begin to move, I go, "Okay, now who said what?" And that's basically what you have to do is try to go dig it up somewhere, and it is kind of crazy. If you look at some of the mag guys here. You can see this is Microsoft. Um, their earnings were good and they jumped them up and they took off. How you like that one? Even Meta here, uh, dang, didn't have as big a move, but it still jumped up and it still has held up pretty well, based off of that. So both of them actually came out and did pretty good. Tomorrow, when we come in, it's kind of interesting. We're going to have some oil guys announce. We're going to have Chevron and Exxon and stuff like that. Their earnings are going to be coming out tomorrow morning, so we'll see if they're still making money or not. But I think overall, we start going back to that GDP number that's negative. There's a website. If you've never been there, um, I'll just show it to you real quickly. Do, 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 do. Yeah, come on. So this is, and I'll just copy this real quick and slap it in here. Do, do, do. If you want to save that. Now, this is the Federal Reserve Bank of Atlanta. This is the GDP now. This is what they do is it's a rolling number. Um, do they have yeah, they kind of do a little bit. I mean, XOP is an ETF. I mean, XOP had got dumped off. If you got out of the EIT trade, cool, fine and dandy. We were basically down to a penny on that thing. If you held on to it, you had a nice little rally in XOP, but it didn't even come close to where our spread was, and they were dumping it back off again. So I wouldn't worry about it a whole lot. But what I'm pointing out here is um, they start adding up everything together, and as news comes out, okay, that's cool. Yeah, I think you'll be fine, Donna. Don't worry about it. I'm still in it myself. So, but they run a running total of GDP. And as newer news comes out, we had PCE and GDP yesterday. We'll have non-farm payroll tomorrow. And you'll notice this is as of May 1st, today, right? If you go back to Tuesday, this was actually negative 2.7%. Now it's positive 1.1%. So this is going to fluctuate throughout the month, is my point. And but if you're trying to figure out kind of where is GDP right now, it's kind of a cool site to go to just to kind of see, well, what's calculated up right now with all the news that we've currently had. And this takes into account all kinds of stuff. I mean, right here, your estimate for real GDP growth is right there, is at 1.1%. And you can read a whole bunch of stuff on this if you want to. And but it's kind of a neat little site if you're trying to figure out what GDP is. And so, and if you have the roadmap software, it's just underneath links. And you just go to Atlanta Fed GDP now. But it's a neat little site just to kind of check on GDP every now and then. So another one that's kind of neat to watch if you're trying to figure out what the Fed's going to do. It's actually in the links again, but I'll just show it to you real quick. At the Chicago Mercantile Exchange's website, you can just do a search. There's a little search thing here at the cmegroup.com. If you'll just type in FedWatch, is all you got to do, it'll take you to this page. And basically, it will tell you, and this is based off trading bonds. This is what they do. Whether, remember, we have the Fed coming out next week, right? On Wednesday, new Fed announcement. So the question is, are they going to have it between 4 and 4.25, or are they going to keep it between 4.25 and 4.5? Okay. And 93% odds they leave it there, as opposed to cut it down to this 4 to 4.25. So that's what this is kind of telling you. If a lot of people say, well, they're going to cut rates, or they're going to, leave rates alone, or they're going to raise rates, whatever it may be. And you got a 93% odds to keep it at, 4.25 to 4.5. And so there it is. So, and the further away you are from a Fed meeting, the more worthless this thing is. But now that we're inside of a week, basically, a lot of people go to this page just to kind of see what bonds are saying. And with the short-term bonds kind of inching up a little bit, they really can't cut rates. So they're probably going to leave rates alone. But it's kind of a neat little site just to kind of see, just a view of that going into a Fed meeting. And it's going to change a little bit. I mean, it might get down to 88%, might get up to 97%. It'll fluctuate back and forth a little bit. But there it is. But as always, there's always a ton of stuff coming out, and markets are going to move based off of it. You talk about a news-driven market. I mean, news is market food. Don't get me wrong. That is what news is. News is just market food, and if they like it, it goes up. If they don't like it, they'll just dump it off. And that's basically what's going on. Another thing to kind of keep your eye on, and I read this morning. I don't know how real it is. There, I'll say it that way. And I actually heard this on the news a month or so ago. But before all the tariffs came in, a lot of manufacturers and retailers were buying up stuff all they could, as much as they could, to get into the warehouses here in the United States. There it is. Well, apparently, all of that stuff they got pre tariff runs out in like 2 weeks. And now they're saying that we're not going to have anything on the shelves anymore, which is a crock. Um, so But I mean, that's the scare tactic they use. But it wouldn't be surprised if things, there are some things that are scarce. Food wise, you won't have any problems, I don't think. As far as, going to get, a cheap monkey wrench from China, you might have a problem with that. um, or whatever. So Harbor Freight might be getting hurt pretty bad, right? But other places might not be so bad. So it'll be really interesting to see how that kind of pans out over the next couple of weeks, 3 weeks, just to kind of see what happens there. But I have been kind of reading different, spots here and there saying, hey, this comes up in 2 weeks. And most people just say, well, I don't know what's going to happen. Um, I don't think anybody does. So, another thing is, I was kind of warning you all that, hey, we may not, uh, have a whole lot of people, you know, giving us forecasts based off of earnings. There's been several companies that have not been doing that. And so that's the big thing. Um, so I think it's going to be, kind of a really interesting earnings season as we continue to go. I mean, even Snap on or Snap um, didn't give earnings last night, and they tanked them off because they didn't give any earnings, no, any projections. Sorry, not earnings, but projections. And so they sold them off because they didn't give any projections. And I'm just like, well, they ought to be kind of getting used to that because I don't think anybody knows what it's going to be look like, in the next 6 months. Until deals start getting done and everything like that, that we've been told is going to get done. Fine, get them done. They start doing that, everybody will start coming out with their projections and hey, I think we're going to be doing this, that, or the other. Things don't get done, we still in uncertainty in 3 or 4 months. Well, you know, things might get a little more shaky. So, but we're in the rough, 3 4 months after the election. So here we are, and everything's just kind of up one day and down another day, and up one day and down another day. Everybody's just news hungry, so that's what the market's going to be reacting to. So we'll just have to deal with it from there. And my goodness, already been going a while here. So anyhow, um, right now I think everything is still holding up pretty good. Uh, Nothing bad, and we'll see if the S&P can hold above that 5644 and maybe continue to kind of inch on. I think the non-farm payroll is going to be our big number tomorrow. After that, and of course, Exxon, Chevron, and all that stuff. We get past all that, we'll see how the week ends on the first couple days of the month. So, but that's about all I got today. Lots of information. It was recorded. So, and we'll kind of go from there.